Is Bitcoin preparing for another major move toward the upside, or should we be expecting a short-term correction to 32,000? In today's video, we're going to be discussing these short-term charts from a technical and a structural perspective, as well as discussing the implications of the upcoming weekly and monthly candle closes. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing Bitcoin from a short-term, a macro, and a technical perspective, going over absolutely everything you need to understand the short-term price action, the next expected move, what Bitcoin is currently doing, the significance of the upcoming weekly and monthly candle close, and everything else in between. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, excuse me, and the relevant economic news. If you are interested in our VIP group, we post trading signals with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to all of our trading signals, you will also get access to our group chat with, again, our general chat, our trading chart and education chat, our news, our video, our help, and our trade setup chat. If you're interested in joining all of that with over 630 members, go ahead and contact me in the pinned comment of the free channel to find out more information. Let's go ahead and dive right into the video. Starting on the market data, how are we currently looking? So, 24-hour volume is down 35%, sitting at a total of 110 billion, with 24-hour liquidations falling 54% to a total of 130 million. Of those liquidations, we are split very evenly down the middle, with 60 million coming from those long positions and 69 million coming from shorts. This is pretty indicative that traders at the moment are kind of pulled between the both directions. A lot of people are expecting corrections, a lot of people are expecting continuations upwards, and we're creating a sideways chop range where the price is now liquidating both sides. We're eventually going to see the price tumble or push higher in those directions. Moving from there to the volatility index, we can see on the 30, we did see the 30-day period actually push upwards, which was really good to see. And the 60, we of course saw the 60-day period start to move upwards again. Again, we do want to see volatility moving in the direction of the price action, meaning if the price action is going up, we want to see volatility go up with it. And if the price action is going aggressively down, we also want to see volatility go up. When volatility is moving sideways and the price action is aggressively moving, that can usually be a sign of weakness, exhaustion, something we're worried about. Now, that doesn't necessarily mean Bitcoin won't see a continuation or won't see a correction, because this is on 30 and a 60, but it tells us the breakout that we did see has some validity behind it. We're discussing that in more detail in today's video. But moving over to the stock market, it's not looking as ideal. With the DXY breaking out of this downtrending diagonal resistance, the DXY is actually officially in a short-term uptrend. With the short-term uptrend, we are expecting a continuation to 108. Now, if we do see this move upwards, this is going to apply some negative pressure for the asset market, such as Bitcoin, such as the S&P, such as the Dow Jones. And again, if we do see the DXY push upwards, we generally see these assets correct. Now, with the DXY breaking upwards, we do have to take this into consideration with Bitcoin's current price action and look for maybe potential reversals. We're discussing that in today's video. With the upcoming economic data being quite significant, we have, of course, the Fed Chair Powell speech. This is going to be tomorrow at 6:30 a.m., so about 24 hours away. We, of course, do have our PCE data and personal income and spending data coming out on the 27th. And fast forward a couple days, we have, of course, our interest rate decision, which is going to be on the 2nd. So we do have some major upcoming news events that has a massive impact on the overall asset market, the risk climate, and potential trajectory of these assets going forward. If we do see interest rates going up, this is going to be very negative for assets, right? We will likely see assets pull back. If interest rates pause, that can push it forward another month. We can see a delay. We can see some more positive growth in the market. So watch out for the 2nd of November. A very, very important time. Moving over to the S&P 500 and Dow Jones. S&P 500 is looking pretty awful here, guys. We are pushing now into our level of support. And again, support is support until it is not. But if we do lose the support, we are likely to continue downwards to around about 4,050 to potentially around 4,000. So looking for another leg toward the downside if we do break down from this support. Until then, guys, support is support, and we could see bounce from this point. But if we do lose that support, expect a continuation lower. The same goes to the Dow Jones. We are now retesting this major area of support. If we do lose the support, we are then expecting a continuation toward these lows, potentially even continuations lower, depending on what happens with those interest rates. So definitely keep your eyes on these markets, and definitely keep your eyes on the DXY and upcoming economic events. Without further ado, guys, let's go ahead and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. So a lot is happening with Bitcoin, and by the looks of things and by the overall perception in the market, we have a little bit of a mix. We have people saying we're in a bull run. We have people saying we're looking incredibly bullish. And then we have people saying this is a massive fake out and we're going to drop down to 12K, right? People are really, really torn between the two. And what I like to say is when this happens, zoom out. When in doubt, zoom out. Look at the data, look at the biases, look at the trigger points, and then just follow the charts. Trading isn't about being right or wrong. It is about making the best decisions possible with the information you have at the time that gives you a statistical edge over a period of time, okay? So what we're going to do today is we're going to talk about the short term, then we're going to break it up to the higher time frame and get into the rest of the stuff. So first and foremost, guys, the short-term charts are starting to exhaust. This is a fact. What we are seeing over here is a clear bearish divergence on Bitcoin. We're seeing, of course, a higher high over here with our divergence, our indicator, our RSI making a lower low. However, this bearish divergence has not actually played out yet. We have not seen a negative momentum shift, meaning although we are seeing exhaustion, momentum is still positive, and therefore we do have a possibility to continue upwards and actually eradicate this exhaustion pattern we are developing. What we are looking for a continuation lower will be a breakdown on this RSI trend line. If you see the 4-hour RSI break this trend line, that is going to signify from this point onwards, this entire area of price action, the momentum has now shifted from positive, right? We have positive momentum through here to negative if we break down from this level. And of course, if we get a negative momentum shift, then the probabilities of a continuation to our nearest support before breaking over our local high increases. So if you see the RSI break down, the likely direction of Bitcoin is going to be a move back down to 32,000-ish. Okay, we might get a little bit higher, we might push it, we might go even a little lower. Okay, and that move becomes more likely over a break over this $36,000 level. Okay, so watch for that RSI, guys. We've seen RSI breakdown. That is going to validate a negative momentum shift for Bitcoin. And if we see momentum push negative, that'll be the first time we've seen negative momentum since we broke above 27.2K. That could push the prices a little bit lower. Now, with that being said, even if we come back down to 32K, we have to remain objective. technically this $32,000 level is now going to be having to be tested as support. So it is still technically a level of uncertainty, as we haven't closed this monthly candle above it. We haven't closed this weekly candle above it. But if we give a weekly candle close above here and that monthly candle close above here, that will flip this level into a support. And if we do retest it and bounce again, that is going to be flipping this level into support. So we'll come back and discuss that in a second. Going back to the smaller time frame charts, if we do see that correction from here, we have to discuss, well, where is Bitcoin likely to go? So let's go ahead and draw that level in. Of course, at the moment on the smaller time frame, we have a rising channel formation develop, right? We had this rising channel formation. We have now broken to the downside of this rising channel formation. If we look at the VRPV can give us some indications as to where the price could potentially go down to. We are looking at this level over here, this $33,000 level. We're looking at this level of support over here. We are also looking at this gap in the VRPV around 32,600 to 32,400. And then of course, we're looking at that major area of support at around about 32,000. So we're looking for targets around about these levels if we do see continuation lower. And of course, this is only valid if we get that 4-hour break on the RSI. If we get that 4-hour break on the RSI, we are then expecting a continuation to one of these three levels prior to a break back above this local high point, okay? So with negative momentum, with momentum shifting negative, it indicates to us buyers are starting to lose strength, and the sellers, the bears, are starting to regain some control of this price action, and that could potentially push the prices down. Now, even if we see a correction, we have to understand Bitcoin is technically in a uptrend while it remains above this diagonal trend line. So we'll go ahead and draw it in. This diagonal trend line represents the trajectory of price action as of right now. As you can see, we've had a period of massive volatility, which pushed us well away from the overall trajectory of the trend, which is this trend line over here, meaning the price is massively overextended as per the current trend, and therefore to see a rejection back to 32K wouldn't be seen as bearish. It would actually be seen as a healthy correction, particularly to retest this 32,000 level as support before a continuation upwards. When does a chart start to flip bearish? Number one, if we close a monthly candle underneath 32,000, that is going to start to make the chart look a little bit weak, as it would suggest a failed monthly break above the major monthly horizontal trigger level, which is sitting at 32,000. But the main level of which Bitcoin will need to remain above to remain in this uptrend is going to be that 28 to 28.4K level, that midline of this horizontal channel formation. A loss of this level will then validate a continuation back to 25.2 and a break of 25.2, a continuation lower. But until we get any of that, we have this entire range of price action that we are in, and we have to, again, we would have to lose before the price would turn bearish. So there is no doubt at the moment on the charts that the price is not bullish. The question is, are we immediately continuing upwards? Are we closing the monthly candle? Are we closing the weekly candle? Or are we going to see a correction first? And will that correction be healthy? Or will that correction lead to the trend turning negative? So to answer our last one, like we said already, for the trend to turn negative, we need to see a break under 32,000. And then for the trend to turn fully bearish, for the weekly trend to turn bearish, we need to lose a 28 to 28.4K level. Okay, ticked off. The weekly and monthly candle close are ones of absolute significance. If we take a look at this monthly candle close, the monthly candle is closing in 6 days' time. According to our historical price action data, every single time we have seen a monthly candle close above the horizontal red line, which is a base support, okay, of the prior cycle, every single time we see that, we see a monthly continuation upwards to retest our dotted trend line. So again, if we get a monthly candle above 32,000, that is going to signify strength and a likely continuation upwards. However, if we close a monthly candle below 32,000, all that does, it delays that monthly candle break for another month. So we have to wait even longer to get that high time frame validation. Moving over to the weekly and of course the fortnightly chart. The weekly chart is of significance as we are looking for this 62.09 break on the RSI and a weekly close above so. Every single time we have seen a breakout and a close above this level on RSI, we end up seeing continuation. We can see the 62 point broke in that last weekly candle. In this candle, we have seen a continuation higher. This candle, in fact, has moved up 12%. If we look at prior breakouts over here, for example, we saw a continuation after that period of around 20%. And we can go back in time and look at every scenario of which the 62.09 has broken on the RSI. We have seen continuations of around 10 to 30% on the Bitcoin price action. So according to this level, not only does it act as a bullish trigger, it also acts as a bearish trigger. So the price action to flip bearish again, we actually want to see that same level, the 62.09 on the RSI, be lost. If we take a look at the 62.09 on our RSI and we say, well, every single time we break above it, we turn bullish. How about when we break below it? Every single time we break below the 62.09, we actually end up going downwards. We can take a look. Every single time we break below the 62.09 on the RSI, doesn't matter if it's a small break or a big break, we end up seeing a correction for Bitcoin. You can see I'm drawing in all the horizontal lines over here. We'll go back. You can see a correction over here. We saw a correction down. We saw a correction down. We saw a 20% correction over here. We saw a correction over here. We saw another correction here. We even saw a 15% correction over here. So you can see how that level is acting as a momentum trigger point for Bitcoin. So if we want to see the weekly charts turn bearish again, we need to see weekly momentum start to turn bearish again. And for that to happen, we are looking at the 62.09 point on that weekly RSI. Now, another thing I want to discuss is the fortnightly chart. And what we can see in the fortnightly chart is, of course, the fortnightly candle, and that is going to be closing at the end of this week. That is, again, a very significant candle, as it would indicate a break above the Gaussian channel midline. Now, generally, when we break above the Gaussian channel midline, we continue through the channel toward the top side at some point. Again, this doesn't necessarily mean we are going to see an immediate candle through. We may continue sideways, we may go sideways, but what it suggests is we are now more likely to break above the upper band of the Gaussian channel prior to falling back below the lower band. The lower band is sitting at 22K. So if we get this fortnightly close above the midline, it suggests there's a greater probability that we will break above the upper band prior to breaking back below the lower band. We can see this play out many times on not only the 14-day, on the daily, and even on the smaller time frames. Going to the Gaussian channel, you can see a break of the midline from the top side down results in the price continuing under before breaking back above. A breakthrough midline from the bottom side up results in the price going above the Gaussian channel before a break back below. And this pattern generally repeats at a pretty high degree of success, around 90% degree of success. We see these swings play out according to the Gaussian channel. Now, what the Gaussian channel doesn't suggest is it doesn't tell us where the price is likely to move to in terms of prices, and it also doesn't suggest when the price will break above this level, but it does just tell us we are more likely to see a break above this horizontal level, this Gaussian channel upper band, which is sitting around 37,000 prior to a break back below it. Now, if we do see a break above this upper band, which is around 38, we are very likely to have also closed that monthly candle above this horizontal 32K level, and that is why it is significant, because it will give us that double validation that not only has the fortnightly close above the midline, not only has the Gaussian channel turned bullish, but of course, with that actually occurring, the monthly candle is very likely to have broken above this level. And you're probably wondering, where did we get 32,000 from? Well, simply, we've taken this low point according to this structure right over here. We've dragged it across this retest, and that is going to be that $32,000 level. So again, a very important horizontal level that we need to break above. Moving back over to that daily chart. Hypothetically, let's say we see that breakout and we continue upwards. Where is Bitcoin likely to go? So the next major trigger point is going to be around 48 to 46,000. Again, do not expect a rapid move upwards. This will only be in play once the monthly candle closes above 32,000. When the monthly candle closes above 32,000, this is going to be the next macro target. And again, like we discussed in our prior video, we are not in a bull run yet. We are absolutely not in a bull run yet. We will be in a bull run when the bull run starts. When does the bull run start? According to our structural chart, we need to see two things. Number one, we need to see a monthly candle close above the dotted trend line. Okay, we see it over here. We entered a bull run officially over here, October 1st, 2016. We entered a bull run officially over here, October 1st, 2020, okay? And we will enter a bull run when we break above the dotted horizontal trend line and enter the bull run phase according to the 4-year cycle. So we do have quite some time to push up the 48K, potentially come back down before we enter a bull run. So according to a lot of people on Twitter, a lot of people on YouTube, we are in a bull run. The price going up aggressively does not tell us we are in a bull run. The price going up aggressively is simply the price going up aggressively. It's great to see we've broken out of the weekly trend, we're entering a macro trend, but for a bull run to start, for us to be in a bull run, it's very specific. We need to see specific things occur on the charts, specific levels taken out, and ranges broken. We can't just say because the price is up 10%, we are in a bull run. That's not how we do it, guys. We have to be objective. That is not saying we are bearish. We are bullish. We've been bullish on Bitcoin since 16.5K. If you've been following the channel this entire way down, we're looking for the bottom 16.5 to 18K, 16.5 but 18K. We bought in this range over here, okay? That is where we were bullish. We are still bullish. We don't expect these levels to be reached again unless 25.2K is reached. We still expect the prices to go up. However, we can also, with being that on the macro scale, be objective on the short term and expect pullbacks. You can expect pullbacks on short term, and that doesn't make you macro bearish. You can trade the chart. So remember, guys, above all else, I am a trader. I actually don't care where Bitcoin goes. This is why I'm able to predict it so well. I have no care, I genuinely couldn't care less where Bitcoin goes. It doesn't bother me. I'm fully objective and I focus on trading primarily. Shorting, longing, up, down, every move we can capitalize on if you remain focused and objective and don't let your emotional biases impact what you think about the charts. So, going back to the short term, guys, we're starting to look a little weak, okay? Something to be watching over the next couple hours. If we see that breakdown in momentum, that could trigger a continuation lower, okay? Until then, we are in this uptrend on Bitcoin. It is a weakening uptrend. It is an uptrend nevertheless. So we do see, again, the price start breaking above these high points. We're specifically looking for this high point around 35,000. If we start getting above 35,000, okay, that is when Bitcoin is going to start showing a lot more strength and potentially push upwards. Until then, we are starting to exhaust. We are starting to see momentum fall, okay? We are starting to see the price exhaust on the hourly, on the 4-hourly. So if we do see that shift, we could expect that continuation lower. If we break above this level, expect a continuation higher for Bitcoin. Most importantly, guys, watch out for that upcoming economic news. It is going to be absolutely significant. And also, watch out for that monthly and weekly candle close. They're going to be absolutely significant for determining where Bitcoin is going, but more or less, the probability of 32K flipping as support, because the 32K flips as monthly support, it becomes very obvious that we expect more upside, and you can put all your stops below this level with a very tight invalidation with massive upside potential. The reason being, if we go back to that monthly chart and we show you one thing on here, which is going to be that horizontal trend line again on the monthly, you can actually notice if we break above that horizontal trend line on the monthly, okay, we never close a monthly candle back below it, okay? So you can see over here, we dropped below it on COVID, but we didn't even close a monthly candle below. We didn't close a monthly candle below it again. So it does tell us, according to historical data, if we flip this 500 plus day long level as support on the monthly chart, it is very unlikely we're going to be closing a monthly candle back below it. Now it can happen. Obviously, we don't know for sure. No one can predict the future. We're not here to predict the future, okay? The market can react in ways we haven't seen the market react. Nothing is going to just play out forever. We could see it, but based on the data we have, based on the prior price action we have seen on Bitcoin, if we close a monthly candle above, the probabilities of closing below diminish, and therefore is a great opportunity to look for some lagging altcoins or for some entries on the market. Another thing I do want to talk about is the total cryptocurrency market cap reaching our major level of resistance. The total cryptocurrency market cap will have to break above this major area of resistance for us to see any more macro continuation upwards or any more strength. This is a very important thing to look at, as we are potentially double topping over here, and that could result in rejection. If we do pull back on the total cryptocurrency market cap, that will result in a correction for the markets. It is definitely something to be watching out for. However, if we break above this level and get above around 1.3 trillion, we are definitely smooth sailing upwards. So watch out for that, guys. Thanks for tuning in. I'll catch you guys in tomorrow's video. Cheers.